you're in the process of launching an asset management business in basically
Yeah.
a nuclear event.
Yeah.
So what I really wanted to do is pick your brains on how you are seeing this event, both from, using your macro perspective, of which, you're very good with that, but also what are the opportunities that it's throwing up as well? Because, there's two ways to look at this. There's a whole bunch of risk, as we know, but there's obviously a whole bunch of opportunity, and it's trying to sift through that I know that's really your strength. That's your skill set in all of this.
Yeah, well, I think, so there's two parts to that question. Where do we think this is going? And where are the interesting opportunities? And I think that the first one is actually a much more difficult question to answer, because I mean we all kind of have our views on where we think it's going, and I think you maybe we're not so different. I don't know. I'm very kind of concerned that we're about to see the kind of mother of all credit events.
Yeah, that's exactly my view.
It hasn't really kind of showed up yet, and I think that we've seen a huge kind of rally, in the kind of really because of a relief and maybe even an optimism that these stimulus packages are just so enormous.
And also the narrative is now caught up, because it was so far behind the reality.
Yes.
So the narrative's caught up. And even Donald Trump yesterday saying, well, 200,000 people might die, he's now potentially even overestimating. Yes. So the narrative is now caught up. So therefore you can rally, essentially.
That's right. Yeah, I think, and we'd fallen so far so fast that, it's difficult really to kind of see how many sellers were left. So there could well be some kind of technical aspect to it. But yeah, it feels like the narrative is caught up. That's exactly it. And I think that you've had this kind of relief that the stimulus has arrived, that the stimulus is here, the speed with which the policymakers have got their act together compared to in 2008 when they seemed to take an age, and I think that the numbers are very big. So people are, I think, kind of relieved that the numbers are so big. For what it's worth, I just feel that there's, James Aitken's talking about these fiscal blockages, and it's just going to take a long time for this money to actually hit the economy. And in the meantime, we just fell off a cliff. So there's going to, those weekly claims were absolutely staggering, and so since you asked, I kind of think nobody really, nobody runs a business. You might stress test your business and think, well, if things really, really go wrong, our revenues might be down 50 or even 60 or 70, but no one really stress tests a business for revenues to go to, down 100% overnight,
For 3 months. For 3 months.
For 3 months, right? So I have a suspicion that this pain is going to be substantial and severe. It is going to trip up a lot of these kind of credit problems. These credit excesses were already very, very evident.
And my fear within this is, if you speak to any market participant, the basic assumption is it's a 6 weeks to 3 month thing, and then we go back. But the problem is human behavior has changed. So the chances of people resuming their consumption patterns, their social patterns and other things quickly is low. The Prime Minister of Singapore made a really good point on this. He's like, look, we're going to keep our borders closed probably for a year, and we're going to have to get used to that, and it will affect us. And he said, I think this is probably a 1 or 2 year issue. Now, that's all well and good, but if you have negative growth over an extended period of time and you've got all of the debt to service, it's game over.
Yeah,
and that's all I think about. My thinking, I can simplify it all down to if people have sold the tail above 3 months, they're probably making a big mistake.
Yeah, I think related to that is the US numbers look completely out of control. Yeah. And you look at the measures they've taken, and they just they've not done enough. It seems to me when you look at when you rebase the kind of fatality count to once you've had more than 30 or 40, it's America's trajectory looks far more like Italy and Spain than it does China. And I think that I know from my own personal experience, we watched this, and by the way, I think we were I mean, as a household, I think we were switched on to this, I think, before most. Not because I was particularly switched on to it, but because my wife was, Mona, who I think you know. And she got very worried very quickly about this. And we actually started stockpiling and cancelling trips. This was kind of back in late January.
Yeah, we did the same.
Right. And now I have to confess, I didn't really see this coming, but I did feel that this was one of those situations where it was probably rational to panic, right? It wasn't irrational to overreact. It was completely rational to overreact. And the reason why we kind of came to that conclusion is because that's exactly how your immune system works, right? There is a biological rationale to overreacting when you're faced with an enemy of uncertain strength. If you don't really know how strong the enemy is, there's no point in going in kind of, with a kind of half-baked defense or a half-baked attack. There's no point in allowing your enemy the chance to come back stronger. So you have to completely obliterate the enemy. You have to completely overreact. And that's exactly what your immune system does in the face of, this is how vaccine works. So I kind of felt, okay, Mona wanted to stockpile. I wasn't so sure, but sorry, let's overreact. So we did all of this, and then we watched the numbers come in, and we actually started kind of getting a little bit nervous about it, a little bit scared about it. But it was all very abstract. And what then happened was it came to Europe, and then it was Italy, and then Northern Italy was in lockdown, and then suddenly it was all of you, and then it was here in Switzerland, and then suddenly we knew people that had it, and now suddenly we know people who died from it, and suddenly it's not gone from this abstract thing, it's gone from something very real. And that even when we saw it coming, that has actually been quite traumatic. And I just feel that that's what America is just about to go through. And I struggle to see really, I struggle to see the market doing okay when that hits America,
And I totally agree. But the weird thing is I think my wife's had it. She's in Grand Cayman, I'm in Little Cayman, so we couldn't get together. She's been quite ill, but she's over it now. We think a bunch of her staff got it. No tests. Now, the problem is she doesn't even know when she's safe to travel again to come over here. She doesn't know who she can meet and what she can do. Does it? And for me, do I have to reset the clock? Do I have to go into quarantine again? Even me going to the store is a nightmare now because nobody trusts each other. And I just look at the behavior already in how much has changed. And America's going to go through this enormously. And it's a real mental scarring for people. I know people, for example, in Southeast Asia who went through SARS have some mental scarring. But this is, clearly a lot bigger than SARS was. I just don't think people are factoring in some of the human behavior because, as you said, I mean, this has now gone from being abstract to a reality. And it's going to be a defining moment in your life that you will never forget.
Yeah.
And nor will any of the people around you. Yeah. That's truly extraordinary. It's kind of like a war.
Yeah, I think that's right. And so it feels as though, you're roughly 25, 30% drop, peak to trough drawdown doesn't really seem to kind of match that type of, emotional scarring. And so that's why I feel that this probably, and I say probably, okay, because we're still on the first question. What do you think is going to happen? And I think right. I think that's actually the far more difficult question. And,
but let me just ask you that because there's outcome and then there's time horizon.
Yeah.
So what is your view in how? And again, this is all probabilistic analysis. None of us have a clue. But best guess, how do you think this plays out in terms of what the market does?
And so my best guess, and I actually my very best guess, which again probably isn't worth very much, but for what it's worth, I think that as the US loses control of this, or is seen to have lost control, I think it's already lost control, frankly. And I think as over the next few days and weeks, these numbers, there will come a point where people see these fatalities and think, "Holy shit! When does this end? When does this end? When does this stop?" And I think that we'll probably see new lows then. And I think that at the same time, I think you will see these the consequence of these fiscal blockages, i.e., not getting the money to the economy fast enough. I think you'll also see the consequences of what I thought I could be wrong, but I don't quite see how you coordinate a kind of mass forgiveness in the credit markets, right? So you seem to, you're going to see, I think, an awful lot of defaults. As I said, these credit excesses were just there for all to see. Before this even started, back in January, you were with the investment grade, and even certainly with investment grade, I think even the higher quality junk, so the double B stuff, was trading at or inside the tights of 2007, 2008. So credit markets were ridiculously tight, and this was when you've had excesses all over the place. So you could see in the loan market the percentage of the leveraged loan market that was now just one grade above C. You could see in the private equity market all these add backs, right, where they were calculating their EBITDA for the leverage calculations in their prospectuses. They were allowed to add back projected savings. Right, so those EBITDA numbers were actually much lower than the ones that were being reported for credit purposes, which everyone knew about, and no one seemed to really care. So I could go on. The credit market was, I think, due quite a hard fall if it was given, a sufficient enough nudge. And what's actually happened is it's been kind of two open-handed palms right in the back, and it's just been thrown off the cliff. So I kind of feel that we haven't really seen the credit problems yet.
So is that usually when a credit cycle comes of this kind of potential magnitude, it's a 18-month affair. Yeah. It's not a 3-month, 6-month, even 9-month affair. Normally, it goes on for a while. What do you think?
Yeah, because once you default, then you lay people off, right? And then your competitors come in and kind of steal a march, and then it's actually then you've got all of a sudden you're having to restructure your balance sheet and restructure your business, and that you don't just do that in a month or two. And for all the, and again, I think this idea that this is only going to last for a few months or a few weeks even, those people that have been let go of, you don't just get a job straight away. So again, I can see why we could maybe be wrong here, and I certainly hope I'm wrong. But my feeling is we go lower here. I think that's kind of my best guess, and it's we're probably 18 months away from 24 months away from making new highs.
Okay,
to those highs.
Yeah, I think I'm even more conservative on this. I kind of feel like we might be a bit of, because of the demographics and stuff like that, there might be a secular cycle at play here as well that concerns me.
Sure.
Because the baby boomers need to divest of a lot of this stuff, and a lot of it's credit and equity. Yeah, comes out over time. So it's very spectacularly bad timing. So I guess we'll see how that plays out. So in that situation, where does the opportunity lie? Because it's difficult to short stuff right here. It's difficult to buy stuff right. It's one of these weird places that tactically, sure, we could punt around.
Yeah.
But to do anything meaningful seems complex.
So this is where maybe I kind of slightly diverge, which is that I don't have a problem thinking that the market's going to go lower, but still buying.
Yeah.
And I find it easier to be a buyer of this market than a seller. And the reason for that is, firstly, I think that the valuations actually now are starting to look okay, right? They don't look completely crazy. Now, I know that. I know the data points. I know lots of people could say, how can you possibly say, but what kind of idiot would say that when the, Shiller PE ratio is still in the top, quintile, and we're still the most expensive equity markets just about, over the past century. I understand those data points, and I don't really agree with them. I don't think that they're very useful. I think that there are some data points which are far more useful, and that they are actually flashing green at the moment. And I kind of give you an example. I think on Friday afternoon, in the high yield market, the implied default rate was over 20%. right? So that's kind of, you're looking at kind of maximum kind of default rates of about 12% in the tech boom for high yield, right? Around about 10% in 2008. You've got an implied default rate of about 20% in high yield right now. So that's kind of, it can go much higher, no doubt about that. But that's already there's some return there. There's some good return there. In terms of how does an expected default rate translate into an expected return? Well, again, it depends how you measure. But if you think about the credit, the credit spread that you get is effectively your compensation for being hit with some defaults, right? Obviously. Now, as that credit spread widens, you can absorb more defaults before you actually take a loss. Now, how much would defaults have to be for you actually to, well, we've already seen 22%. Let me ask the question a different way. Suppose defaults come in at the worst historical 5-year average rolling default rate, right? Which was, I think, it was actually early 2000s. The rolling average, something like worst rolling average 5 years is about 10%. Even if we are about to go into that now, you're still going to make about a 4% return. Okay, now I'm not saying 4% is particularly spectacular, but under stressed scenarios, you make a 4% excess return over whatever you make in treasuries. Now, that's okay. I think that's okay. It's not completely, jaw-droppingly, mouth-wateringly fill your boots stuff, but that's something you buy. That's not something you look to sell.
And how do you size up the potential credit event? Because it has a risk of being maybe a larger credit event than we have lived in our lifetimes through.
Yeah.
How do you get a grasp of that tail? Because that's the only way you can price this is, okay, this is what I think the tail is worth. This is where I think it's trading now. Am I compensated for that tail?
I think two things. The first is, I think it's kind of very, and it might be a little bit late now, or maybe not. I think it's prudent to have some of those things in your portfolio that people say only idiots have in their portfolio. For example, gold, right, or Bitcoin.
Yeah,
which I know you're a big fan of. We've been in. We've actually spent most of that whole crypto bubble. We were actually living in Zug at the time.
Mona's in that world, isn't she?
She is. She did one of the first ICOs in Switzerland. I think it was the third ever ICO actually, and I think it was late 16, early 17. So we did get front row seats to that whole madness. And it was madness, and it kind of still is madness, actually. But it's something we kind of know a little bit about. I understand why people are squeamish about Bitcoin, but I don't think it's a dumb thing to have some. I think gold maybe is a bit easier for people to get their head around, although obviously a lot of people don't like that. And I think that, in the real kind of tails, the real extremes, I think those things should do very well. Assuming you avoid those tails, and you can have quite a nasty environment, a very nasty market without kind of society blowing up, right? Which is the kind of extreme tail that I think you go with Bitcoin. I think it's well, you want some cash.